Have you ever felt like you're sitting at a bus stop, waiting for the alt-season bus to pass by, but all that keeps coming is the Bitcoin bus? Yes, that's the reality of the crypto market today. Bitcoin is dominant, altcoins are still struggling, and many are starting to get anxious. Hey, when is the right time to switch from BTC to altcoins? Hello everyone, welcome back to Mr. Suw Crypto's channel, where we discuss crypto with logic, not just hope. Today, we'll address one big question on many investors' minds, whether they're beginners, traders, or seasoned hodlers. If Bitcoin is still dominating now, when is the right time to start diversifying into altcoins? And what can we use as a benchmark to avoid getting stuck at the peak? This is super important because we all know Bitcoin usually leads the way at the start of a bull run. But in the next phase, shifting funds to altcoins can offer much greater potential gains, as long as the timing is right. The problem is, not everyone can tell the difference between a real alt season and just a temporary altcoin pump. In this episode, we'll cover everything. Why does Bitcoin always lead the way? When does the alt season typically begin? What indicators can help us make decisions? And what's the safest strategy for portfolio rotation? But before that, as always, disclaimer, this is not an investment recommendation. Everything discussed here is purely educational. Make sure you align it with your personal risk profile and always do your own research, DIY. Grab a hot tea or coffee, and let's break it down one by one, starting with why Bitcoin always leads the way. Chapter 1. Why does Bitcoin always lead the way? If the crypto market were an orchestra, Bitcoin would be the conductor. It sets the tone for the entire market, rising first when a bullish trend begins, and usually falling first when a correction comes. But why always Bitcoin? Is it because it's the oldest? Or just because it's the most expensive? The answer goes beyond history. 1. Bitcoin equals trust plus liquidity. First, Bitcoin is the most trusted and most liquid asset in the entire crypto market. When institutions enter, they don't immediately buy strange altcoins. They enter through the big, strong, and legal door, and that door is Bitcoin. Institutions like BlackRock, Fidelity, ARK, and Vanguard all enter through Bitcoin spot ETFs. Why? Because Bitcoin is seen as the first and most established digital asset. Limited supply, 21 million BTC. Strong narrative, digital gold, and inflation hedge. Clearer regulations compared to altcoins. When the market starts to recover, large funds flow into Bitcoin first, not into random altcoins with daily volumes of $5 million. 2. BTC dominance rises during uncertainty. Every time the market is in turmoil, whether due to regulatory news, geopolitical events, or macroeconomic factors, many investors sell altcoins and flee to Bitcoin. Because it is considered safer, though still volatile, the risk is lower than that of small altcoins. So if you see Bitcoin dominance rising amid a sideways market, it's a sign that people are still hesitant to engage in high-risk speculation. For example, right now, Bitcoin dominance is above 64%, meaning over half of the crypto market capitalization is locked up in Bitcoin. It hasn't spread significantly to altcoins yet. It's like water in a dam. It hasn't been released, so it's not flowing. 3. Market cycle, Bitcoin first, altcoins later. In nearly all previous bull runs, the sequence has been similar. 1. Bitcoin pumps first. 2. Traders and investors profit, start looking for other coins that haven't risen yet. 3. Capital rotation to altcoins begins. 4. Then the alt season begins, usually short and volatile. This cycle repeats due to human emotions plus profit-taking logic. After BTC rises 2-3x, people start feeling they're late to the party. They begin searching for altcoins that haven't risen yet, hoping for higher gains, and that's the start of alt season. If you enter altcoins too early, you'll just be an early bag holder, not an early adopter. But if you enter too late, you might end up buying at the peak of FOMO. 4. BTC dominance equals market psychology indicator. The Bitcoin Dominance Index, BTC.D, isn't just a number. It reflects the overall market mood. Dominance rises equals conservative market, altcoins still risky. Dominance decreases equals the market is becoming risk-on, altcoins are starting to be noticed. We can use BTC.D as one of the tools for analyzing and timing portfolio rotations more intelligently. In short, Bitcoin leads because it's the largest, most stable, and most trusted. Institutions enter through BTC, not altcoins. The market uses BTC as a barometer of direction. Fund rotation to altcoins only occurs after BTC is sufficiently strong and stable. So before you FOMO into altcoins because you see one or two coins doubling in price, make sure you understand why BTC dominance is so important to monitor. Next, we'll dive into the topic many people are eagerly awaiting. What are the signs that an alt season is about to begin? How do we know the market is ready to shift from Bitcoin to altcoins? Let's move on to Chapter 2. Chapter 2. Signs that alt season is about to begin. Imagine this. You're scrolling through CoinMarketCap. Bitcoin is stagnant, but suddenly an altcoin jumps 40% in a day. The next day, another coin jumps 60%, and then a random project from an unknown network suddenly trends on Twitter. Well, that's not a coincidence. It's a rotation signal. But to avoid making the wrong move, let's discuss the objective signs and main drivers of alt season in depth. 1. Decline in Bitcoin dominance, BTC.D. The most classic but still relevant sign. When the BTC.D chart starts to decline significantly, it means capital is starting to flow into altcoins. For example, BTC.D rises to 64%, the market is still focused on Bitcoin. BTC.D drops to 60% or below consistently, a signal that a capital rotation is underway. The key is the trend. A 1 to 2 day decline isn't enough. But if the chart drops over 1 to 2 consecutive weeks, while many altcoins rise 2, 3x, an alt season might be on the horizon. 2. Bitcoin sideways after a sharp rally. After a major Bitcoin rally, e.g., rising from $60,000 to $120,000, it typically takes a break. This is the stable above phase, where BTC moves sideways within a certain price range. That's when investors and traders start to get bored and begin looking for coins that haven't risen yet. This is the phase of liquidity distribution to altcoins. Example, Bitcoin stagnates at $120,000, but Ethereum, Solana, Injective, or LSD projects like Ether.fi start rising first. Then mid-cap coins follow, then low-cap coins. That's the classic alt season pattern. 3. Altcoin market cap begins to strengthen, Total 3 chart. Check the altcoin market cap chart, usually referred to as Total 3, total crypto market cap excluding BTC and ETH. If Total 3 starts breaking major resistance levels, for example, breaking through $500 billion, $800 billion, $1 trillion, it signals altcoins are starting to attract capital inflows. Market confidence is increasing outside of BTC. Total 3 often serves as a faster signal than waiting for altcoins to trend on TikTok. 4. New narratives emerge and dominate. Alt season isn't just about capital rotation, but also narrative rotation. Narratives are like market themes. Examples: 2020 to 2021, DeFi summer, NFT boom. 2022, Layer 1 wars, Solana, Avalanche, Phantom. 2023, LSD, liquid staking derivatives. 2024 to 2025, AI, RWA, real-world assets, modular chain, SocialFi, app chains. If you see a particular narrative trending across all social media, YouTube, Twitter, even being noticed by institutions, and the tokens within it start rallying simultaneously, that's a strong signal that the market is opening up to risk and innovation. Meaning, alt season has begun. 5. Volume and retail sentiment explode. When altcoins start rising, we'll see altcoin trading volume increases drastically. Google trends for keywords like best altcoins, alt season, crypto gem rise. Influencers start discussing small altcoins nonstop. Random tokens pump without a clear reason. This is the phase where retail investors have entered. FOMO has spread. It is precisely at this phase that we must be cautious, because we may be nearing the end of alt season. But it could also be the early phase, if altcoin market cap is still historically small. Bonus: don't fall for fake alt season. Sometimes the market gives a fake alt season, one narrative pumps, but others stagnate. For example, only the AI narrative is moving, or only Ethereum L2 is rising, while others remain stagnant. If that's the case, don't go all in immediately. Wait, is the rally spreading? Are tokens from different narratives rising together? Is volume sustaining? Or is it just a pump and dump? A valid alt season always involves multiple altcoin sectors simultaneously, with volume and sentiment rising together. In short, signs that an alt season is beginning can be seen from a decline in BTC dominance, Bitcoin trading sideways after a rally, a breakout in the total 3 chart, a new narrative emerging and gaining traction, retail investors becoming active, but don't enter too late. Remember, alt season can bring big profits, but it can also trap you if you don't understand the pattern. So in the next chapter, we'll discuss more practical aspects. How to diversify your portfolio from BTC to altcoins with a safe, wise, and regret-free strategy. Continue to Chapter 3. Chapter 3. Gradual Portfolio Diversification Strategy. We have discussed why Bitcoin always leads the way. We also understand the signs that alt season is about to begin. Now, the crucial question. When and how is the safest way to start moving funds from Bitcoin to altcoins? There's no one-size-fits-all formula for the answer, but we can use a logical, gradual approach, and most importantly, one that avoids getting stuck in a mass sell-off. 1. Why is diversification important? If you only hold Bitcoin, that's good for preserving value. But you'll also miss out on the potential for big gains when the alt season explodes. Many mid-cap altcoins can rise 5x, 10x, or even more. The problem is, not all altcoins will rise, and not all will survive. Therefore, diversification doesn't mean abandoning BTC, but rotating a portion into altcoins with a strategy. 2. Determine the initial composition. How much BTC, how much altcoin? Use Mr. Suw Crypto's basic guideline. Greater than 70% Bitcoin, 30% altcoins. But during alt season, you can rotate to 50% Bitcoin, 50% altcoins, or even more aggressively, only if you understand the risks. Gradual example. When BTC dominance starts to drop from 64%, 62%, allocate 10% of your BTC portfolio to large altcoins, e.g., ETH, SOL, Link. If it drops further to 60%, add 10% to mid-cap altcoins. Below 58%, you can then enter low-cap altcoins, if you dare. 3. Choose altcoins based on narrative and fundamentals. Don't just pick altcoins because a friend said they're good or they're trending on TikTok. Choose based on strong narrative and active momentum, e.g., AI, RWA, LSD, modular, active team and clear roadmap, stable liquidity and volume, tokenomics that aren't restrictive, no brutal inflation. Tools to help. Messari, DeFi Llama, CoinGecko Narrative Tracker, Chain to monitor smart money wallets. 4. Use the dollar cost averaging, DCA, method. Don't invest all at once. If you have $1,000 to allocate to altcoins, buy in 3 to 5 stages over several weeks, not all at once. Example. Week 1. Invest 20% in ETH and SOL. Week 2. Invest 20% in AI narrative. Week 3. Monitor trends, continue or hold. DCA protects you from buying at the peak and provides flexibility for market corrections. 5. Rotation isn't just about buying. It's also about selling and evaluating. Diversifying into altcoins doesn't mean you abandon BTC and just let things be. You need to actively evaluate. Are the altcoins you bought performing as expected? Is the narrative still relevant? When is the right time to take profits and return to BTC or USDT? Practical tips. Set a profit target per altcoin, e.g., 2x from entry. Use a trailing stop if it keeps rising. If the project starts to lack updates, volume dries up, and the narrative dies, exit. 6. Avoid blind diversification. Fatal mistake. Buying 20 altcoins because they all look cheap. The result? No focus. Can't track everything. Don't know which ones are performing well and which ones are failing. Ideally, choose only 5 to 8 altcoins. Maximum 10. Make sure you understand all the coins you hold. In short, a safe diversification strategy from BTC to altcoins. Start when BTC dominance begins to consistently decline. Use gradual allocation, not all in. Choose altcoins with relevant narratives and active teams. Use DCA and tiered entry strategies. Continuously evaluate. This isn't a buy and hold strategy. Don't hold too many random tokens. Less is more. Next, we move on to Chapter 4, the final section. How to identify risks, FOMO traps, and common mistakes that can ruin your portfolio during alt season. Ready? Let's dive into Chapter 4. This section is extremely important because the shift to altcoins can be a golden opportunity, but if you make a wrong move, it can turn into a Batman trap disguised as profit. Chapter 4. Risks and common mistakes when rotating to altcoins. Alt season is like a fireworks display. Beautiful, exciting, colorful, but also fleeting and can blow a hole in your wallet if you're not careful. Many traders who were actually profitable failed to exit at the right time or overtrusted mice in coins that ended up rug pulling. Let's break down the most common mistakes one by one, so we don't get caught up in the chaos when altcoins start to run wild. 1. Entering too late when alt season is already halfway through. Classic mistake. Waiting for altcoins to rise threefold before FOMOing in, out of fear of missing out. Typically at this stage, influencers start hyping up obscure coins. Coins with unclear fundamentals suddenly surge by 500%. Telegram and Twitter groups are abuzz with absurd price targets. If you enter under such conditions, you're likely to become someone else's liquidity exit. Tips. Check the BTC dominance chart. If it has dropped drastically in a short time, and altcoins have already risen significantly, don't go all in. Focus on narratives that are still in the early stages or haven't gained much attention yet. 2. Over-diversification, buying everything that's rising. Not all coins that rise today will last another week. Over-diversification equals spreading your investments too thin across coins you don't understand. Ultimately, lack of focus. Don't know which ones to hold. Don't know when to cut losses. It's better to hold 5 to 8 altcoins you understand and monitor than 20 coins whose CEOs you can't even remember. 3. Misjudging the narrative. Jumping on the bandwagon without research. Many people jump into a narrative just because AI is trending or a friend said SocialFi is going to explode. But does the project you're buying actually have a working product, an active and transparent team, healthy tokenomics? If not, you're just buying into the narrative, not the substance. Check the project on GitHub. Check developer activity. Twitter, is the project active? TVL, if it's DeFi. Funding and partners. 4. Failing to take profits due to the moon mindset. This is the most painful. The altcoin has risen 5x. You don't sell because you're sure it will rise 20x, but it ends up crashing 80%. The reality. Altcoin pumps are often short-lived. If you're not disciplined about taking profits, you're just passing through. Use gradual take profit, e.g., sell 20% every time it rises 50%. Trailing stop loss, follow the rise, but lock in profits if it drops. 5. Not prepared for an exit strategy, relying only on luck. If you enter an altcoin without knowing when to exit, it's like boarding a ship without knowing where to dock. Must have entry and exit targets, not just wishful thinking. A plan if the market crashes. A plan to rotate back to BTC, ETH, or stablecoins. Example, if coin X has risen 3x, I take 50% profit, the rest on trailing stop. If the narrative dies or volume drops 70%, exit everything. 6. Still using hot money. You know this is a key point from Mr. Suw Crypto's principle. Don't use household money, rent money, or emergency funds to buy altcoins. Alt season can indeed provide quick gains, but its volatility can make you panic sell at a loss or overtrade, ultimately leading to significant losses. If the money is keeping you up at night, then the allocation is wrong. In short, the most common mistakes when rotating into altcoins. Entering too late due to FOMO. Buying coins randomly and in excessive quantities. Misreading the narrative. Failing to take profits when already in the green. Not having an exit plan. Using funds that cause stress. Alt season isn't just about seeking high gains, but about how you manage momentum and risk intelligently. Next, we'll move on to the final section. Closing. When is the ideal time to rotate? And how to build a resilient altcoin portfolio, including the 5 rules in Mr. Suw Crypto's fresh take. All right, let's wrap up with a concise, reflective, and educational climax, so that Mr. Suw Crypto's listeners leave with insights, not just talk. Let's dive into the final section. Is it time to shift to altcoins? Conclude with logic, not FOMO. So, after we've gone through 4 chapters packed with substance, the question comes back to you. Is it time to diversify from Bitcoin to altcoins? The answer isn't one size fits all, because everyone has different portfolios, different risk profiles, and varying levels of mental capital. But one thing is certain, alt season isn't a myth, but it's also no guarantee of profits. You still need to understand when to start rotating, which coins are worth taking, and how to exit without panicking. Don't just follow the narrative, but understand the context. Don't just jump on the pump, but don't know how to exit. And most importantly, never let profits on the screen become an illusion that disappears because of greed. If you've held Bitcoin from the start, that's a wise move. But the crypto world doesn't stop at BTC. There are opportunities in altcoins, but only if you enter with a strategy, not speculation. This podcast is not an investment recommendation. Everything must be tailored to your risk profile, and DYLR, do your own research, remains the top priority. Closing. 5 rules by Mr. Suw Crypto, fresh version. Before we wrap up, remember and note these 5 sacred principles. These aren't magic spells, but a compass when the market goes crazy. 1. Cold money, not hot money. If it keeps you up at night and stresses you out, that means the allocation is wrong. 2. Don't over-leverage. Crypto is already volatile enough. Don't add the time bomb called debt. 3. Build a foundation, 70% BTC, 30% altcoins. Only after understanding the risks can you adjust the proportions according to your strategy. 4. Always have cash ready for opportunities. When others panic, you can buy, but that requires preparation, not recklessness. 5. Think long-term. The profits aren't today, but from consistency over the years ahead. So how about it? Ready to set up a rotation strategy to altcoins with a cool head? If you like this podcast, help support Mr. Suw Crypto's channel. Like, subscribe, turn on the bell icon, and comment below. When did you start rotating from BTC to altcoins? See you in the next episode. Stay profitable, stay sane, and remember, in the crypto world, patience isn't just rewarded with land, but also with the ability to buy an island.